A softer-than-expected ISM services report was the gift that Fed doves have been waiting for ahead of a key non-farm payroll report. The U.S. service sector contracted at its fastest pace since the pandemic according to the survey. New orders also slumped, employment contracted again and prices were also softer. The unemployment number will garner more interest than usual given that Jerome Powell said that the 4% unemployment was still relatively low. And with the consensus estimate for unemployment to fall to 3.8%, markets will likely be very excited with the print at 4.1% or higher, as suggests the Fed will cut rates much sooner. Fed fund futures are now implying a 66.5% chance of a September cut, with a second cut in December implied with a 44.8% probability. At current levels, the weekly chart is on track to break a 4-week winning streak and complete a 3-week bearish reversal pattern called an evening star formation. The fact that the market has failed to retest the large bearish engulfing candle high set in April, and therefore not retest 106, suggests that we could be looking at the early stages of a bearish reversal for the US dollar. So, a hot NFP report tomorrow could provide a better entry for bears to fade into. Obviously, a weak NFP report could see downside momentum for the US accelerate. The Australian dollar finally saw the upside break we've been anticipating, with a clear break above 67 cents. Given US Independence Day holiday today and NFP tomorrow, we could find volatility on the lower side for now. But with the trend structure clearly pointing higher, the bias remains to buy dips the Aussie from move up to 68 or even 69 cents. The 1-hour chart shows that the acceleration higher was accompanied by very high volumes, which indicates that bulls were behind the move. Prices retraced back to the monthly R1 pivot point and the 67 cents level, so perhaps we'll get treated to a little bounce today. The question is whether we'll see decent follow-through, given expectations of lower liquidity around the holiday period in the US. But with a strong bullish trend structure on the daily and 1-hour timeframes, dips are likely to appear favorable to bullish swing traders.